This is Barry Zalma on insurance. Today I'd like to speak about errors and omissions and the claims made and reported policies. When purchasing errors and omissions insurance, the insured must be aware that the policy will invariably only respond to claims that are made and reported during the policy period. Further, since the application becomes a part of the policy and is incorporated into the policy, the insured is warranting the absolute truth of every statement made in the application. Claims-made policies are common in the professional liability insurance market. They differ from traditional occurrence-based policies primarily based upon the scope of the risk against which they insure. With claims-made policies, coverage is provided only where the act giving rise to coverage is discovered and brought to the attention of the insurance company during the period of the policy. The essence of a claims-made policy is notice to the carrier within the policy period. Claims made or discovered policies are essentially reporting policies. If the claim is reported to the insurer during the policy period, then the carrier is legally obligated to pay. If the claim is not reported during the policy period, no liability attaches. Insurance companies favor claims-made policies because they allow for a more precise calculation of risks and premiums. There is no long-tail liability of losses that occurred during the policy period of an occurrence policy but reported dozens of years later. This theoretically results in lower premiums for an insured, since there is no open-ended tail after the expiration date of the policy. Claims-made policies will invariably contain a warning like the following. Quote, "Notice, this is a claims-made form, except as to such extent as may otherwise be provided herein. The coverage of this policy is limited generally to liability for only those claims that are first made against the insured and reported in writing to the company while the policy is in force." Close quote. Similarly, insurers who issue a claims-made and reported policy will issue the following warning. Quote, "This policy is a claims-made and reported policy. Except as otherwise provided herein, this policy covers only claims first made against the insured and reported to the insurer during the policy period, or extended reporting period if applicable. Amounts incurred for damages and claims expenses shall be applied against the retention amount. Please read this policy carefully." Close quote. Some states, like Virginia, codified the issuance of claims-made liability insurance policies. The statute in Virginia is Section 38.2-2229, claims-made liability insurance. Similarly, in Texas, the insurance code provides at Section 2209.302 that coverage on a claims-made basis is allowed, and the pool may provide liability insurance coverage on a claims-made basis on forms approved by the department. Connecticut created a more detailed statute, Section 38A-394, but regardless, all of the claims-made or claims-made and reported policies are limited to claims made within the term of the policy. In a case called Personal Resource Management versus Evanston Insurance Company, a 2014 decision of the Indiana Courts of Appeal, Personal Resource Management, Inc. and Margaret A. Didion appealed the trial court's entry of summary judgment in favor of Evanston Insurance Company on the insured's complaint alleging breach of contract. The Indiana Court of Appeal chose the easy route to resolve the dispute. It found that the claims were not made within the policy, nor were there acts that did not fit within the definition of professional services. It could have concluded the policies were acquired as a result of misrepresentation of material facts, that there were no prior losses, and that the insured knew of no potential claims. These facts allowed the insurer to declare the policy void based on the standard fraud, misrepresentation, or concealment condition, or to rescind the policy from its inception, since it was acquired as a result of fraud or material misrepresentation. Since every statement of fact in the application was agreed by both to be material, courts have found that claims-made policies do not offend public policy and serve a useful function in permitting insurers to more closely control the risks they wish to insure. Controversy has arisen concerning the enforceability of the policy language requiring an insured to report a claim during the policy period. Considering the requirement that a claim be received during the policy period, courts have considered what constitutes a claim and when such a claim will be deemed to have been received by the insured. Although an occurrence policy protects the insured against the financial consequences of an accident or other liability-creating event that occurs during the policy period, no matter when the claim is made, it might be many years later. A claims-made policy protects the insured against the financial consequences only of a legal claim asserted against him during the policy period. When the policy clearly excludes a claims made before the coverage period began, there is no reason to think that knowing about a prior lawsuit would have changed the insurer's decision to issue the policy. Even an underwriter who knew about the lawsuit could reasonably have assumed it would not be covered under any policy that was eventually issued, since the policy only covered claims made during the policy period. The Supreme Court of Wisconsin in Anderson v. All, a 2015 decision, held that the notice prejudice statutes do not apply to reporting requirements of a claims made and reported professional liability insurance policy. In Oregon Schools v. National Union, a 2008 decision of the U.S. Courts of Appeal, the Ninth Circuit agreed that the notice prejudice rule does not apply to claims made and reported policies, because notice under a claims made and reported policy is the very act that triggers coverage. It is not a defense that can be waived, even if the insurer also asserts the defenses. In Bang Chiang Lisa Yu versus Century Surety, a 2014 decision of the California Court of Appeal, the court refused to apply the notice prejudice rule to claims-made policies because it would give insureds an extension of coverage gratis, free, improperly rewriting the contract. It did so because it recognized that an insurance company has the right to limit the coverage of a policy issued by it, and when it has done so, the plain language of the limitation must be respected. Claims professionals must understand that unlike occurrence policies, where a third-party claim vests at the time of the injury or occurrence, a claims made and reported policy establishes certain conditions preceding to coverage. Under claims-made policies, the mere fact that an act, error, or omission occurs during the policy period is not sufficient to trigger insurance coverage. Claim triggering reporting is one of these conditions. By serving as a required element for establishing a claim under a claims made and reported policy's insuring clause, claim triggering reporting allows the insurer to close its books on a policy at its expiration and therefore attain a level of predictability unattainable under standard occurrence policies. Because claims made policies are unique in the time limits imposed, the notice prejudice rule requiring an insurer to prove prejudice before denying a claim for late reporting is typically and only applied to occurrence policies, which cover events occurring during the policy period, because its application does not materially alter the insurer's risk. For a claims-made policy, giving notice within the policy period is what actually creates coverage in the first instance. Under Arkansas law, a claims-made and reported policy can only be triggered if the claim is made in writing and given to the insurer during the policy period. Consider Campbell versus Utica Mutual, a 1991 decision of the Arkansas Supreme Court. Since written notice to the insurer of a claim within the policy period is a condition precedent to the insured's rights under the policy, the insurer's duty to defend does not arise unless and until it receives such notice from the insured during the policy period. The two provisions do not conflict, and the policy is not ambiguous. Because the insureds fail to comply with the claims made and reported provision of the policy, the insurer, ACE, had no obligation with regard to the insured's claims. This was Jennings Construction versus Ace American, a 2011 decision of the United States District Court for the Middle District of Florida. Under Massachusetts law, that for a claims made and reported policy, the insured event is the combination of both requirements. 1, the claim must be first made against the insured during the policy period, and 2, the claim must be reported to the insurer within the policy period. This notice within the policy period is of the essence in determining whether coverage exists. This was a 2009 decision of the First Circuit called Gargano versus Liberty International Underwriters. So what is a claim? The term claim is not defined in the CGL policy. The meaning may be inferred from the insuring agreement, which provides that the policy, quote, applies to bodily injury and property damage only if a claim for damages because of the bodily injury or property damage is first made against any insured during the policy period. An insurance claim is a formal request by a policyholder to an insurance company for coverage or compensation for a covered loss or policy event. Some policies, attempting to avoid confusion, define the term claim as follows, quote, a demand or assertion of a legal right seeking damages made against any of you. A claim includes an arbitration proceeding to which any of you is required to submit or to which any of you has submitted with our consent, close quote, with the word you being defined as the insured. Courts considering this question have almost always held that a claim is the assertion of a legal right and or a legal demand for damages or some other form of relief. Courts have generally found that a request for medical records or other information preparatory to a possible claim in the future will not trigger coverage. An inquiry cannot be transformed into a claim or demand depending in each case on the reasonable expectations of the insured. Such a rule would firmly write uncertainty of coverage into every policy. Similarly, complaints concerning the quality of professional services rendered do not rise to the level of a claim unless the communication also asserts a demand for damages or other relief. The word claim consistently refers to an assertion of a legal right by a third party against the insured. For example, when the notice of claim or suit provision of the policy states that if a claim is made or suit is brought against the insured shall promptly forward to the insurer every demand, notice, summons, or other process received by him or his representative. The clear contextual implication of these statements is that the word claim refers to an assertion of a legal right by a third party against the insured. A key purpose of the claims-made policy is to prevent limits or policies from being stacked and to eliminate uncertainty regarding the policy that will apply to a given matter. This is accomplished by concentrating on the time that a claim is received instead of struggling with the problem of determining the date of an occurrence. The date of occurrence is usually set at a date when the injured party was actually injured. Some courts have even modified this simple rule to provide coverage where none was attended. The claims-made form avoids any attempt at social engineering by requiring an assertion of a legal right within the operative dates of the policy. This video was adapted from my book, Zelma on Insurance Claims, Part 105, 3rd edition, which is available as both a Kindle book, a paperback, and a hardcover from Amazon.com. If you found the video to be interesting or useful to you or your colleagues, please pass it on. It's free. And please also subscribe to my YouTube channel and my Rumble channel, clicking on the like or Rumble buttons as you do. And please subscribe to my blog and my Substack publications so that you can be informed of future blogs and future videos. Thank you for your attention.